Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes. One of the things that strikes me, Taylor, is the growth of Bamboo. And so, beyond, some of the tricks that you guys have talked about already around, capacity management and some of those real-time analytics, what are some of the things that, I'm tracking here 109% revenue growth over 3 years and, named to Inc.'s 5,000 list of America's fastest growing companies. This is an incredible success story. But what else beyond just some of those secret sauce elements you've described do you think has contributed to such amazing growth?
It starts with the team. I was fortunate to come in after a couple of years, joined an amazing team that is really passionate about getting up and working with each other. We solve problems, and don't get me wrong, there's been plenty of problems for us to solve along the way. Sure. But if you remain rate adequate, you look at our trajectory and what that 109% growth looked like, it was very slow and steady, like a traditional insurance organization the first 3-4 years. Right? We made sure that we had the filed rates, and from your California experience, right, that can be a process. It takes some time, so you don't want to fall behind. We found ourselves positioned nicely when the market changed and had the right relationships with our distribution partners, our capital providers, the reinsurers. You look at that when your loss ratio, you can only squeeze the dollar so far, right? And having an appreciation for everyone needs to have the economics have to work for everybody within the value chain for this to be successful. And that's one of the things that I think we've prided ourselves on is we try not to get too greedy. We try to do things right down the middle of the road, ensure that we're in compliance with the DOI and we have great relationship with them. The reinsurers are getting their piece. The fronting partners get their piece. Our agents, we're 97% through agents, just a small sliver through our own internal agency. Everybody has to make money for this to work. So, and I think that's one of the things, again, from a team, you go down our roster of folks within the insurance industry, folks know that was kind of second nature to us. It wasn't as if we had to concoct something or make something up out of thin air.
It's that carrier pedigree is helpful, right? That's exactly the piece there. Yeah, and I think that ties back to what you were describing before as is that insurance first philosophy rather than that tech first, which there's a couple companies we can name that took a tech first strategy and they struggle to print money, right? And interestingly enough, Taylor, you'd asked me in the pre-show how ITC was going. Or how it went, and there was a panel there just for the sake of kind of continuing down this line. That was talking about, this was a panel of I guess, investors from the private equity arm or of the investment arms of various large carriers and some funds. And they were all saying at the same time that the level of investment that they're prepared to make in InsurTech has dramatically shifted down. And the focus now being on where are the teams that have particular insurance underwriting expertise that have a unique kind of niche underwriting value proposition and that have demonstrated success over a period of time. That's kind of what I heard from the investment committee, if you will, at ITC.
It makes a lot of sense and speaks true to the Bamboo team. That's where we've been from day one, focused on the loss ratio, focused on, getting to profitability. When I joined in 2020, one of the reasons I joined Bamboo is because we were at or near break even. It didn't feel like that big of a risk when you're joining a startup that's running at or near break even. Sure, They didn't have this giant balance sheet, but if you're essentially cash flow neutral, it's not that big of a risk.
Yeah, that makes good sense.
So I agree.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.